Hello, everyone. Welcome. We are so excited to have you join us today for our Wocstar Academy Spotlight Series. This is a very special episode featuring Wilson Rosa and Stefanie Thomas Williams. We're doing a fireside chat with our founder, Gayla Jennings O'Byrne. And for those of you that don't know, the Wocstar Entrepreneurial Academy is in partnership with Walmart and Ghetto Film School. We are a special cohort-based program, and we focus on how to raise capital for entrepreneurs and how to tell your story in an impactful way. This is one of the exciting highlights we do with our program, where we introduce you to real life industry experts and hear a little bit from them about their take on what's happening, some tips and tricks on how you can survive as an entrepreneur in these crazy times. So we're really excited to have you guys all here. I'm going to pass the mic over to our founder, Gayla Jennings O'Byrne. Hello.
Hello. I woke up just so happy because I love what we're about to do. I know being an entrepreneur, the idea of raising capital and going and meeting with investors can be daunting. It can be a little stressful. And so one of the things in creating the academy was we wanted to make sure that you got an opportunity to meet investors, meet venture capitalists, so that you now have friends and allies that are check writers. And so I woke up really happy that we were going to be doing this. And not only that we're doing this, but we're doing it with two people that have a special place in my heart because they are allies, they are champions, they are the real deal, and they are committed to the community at large. So let's get started with some introductions. They're going to tell a little bit of their story as we go, but I just want to pick out a few highlights because they're kind of badass rock stars. And I don't want any of the good, juicy stuff they've done to get lost. So I'll start with Stefanie, ladies first. I actually met Stefanie when I was starting my firm. So even though she's younger than me, she's an OG in the VC world. And she is now with Zeal Capital Partners and is doing amazing stuff there. So one, she leads the Barclays Black Formation Investment Strategy, and they are screening over 1,000 companies. They're deploying capital, pre-seed, on up. They are also involved with folks like yourselves. So if you're an entrepreneur, Zeal Capital is actively investing. So make sure you put them in your fundraising strategy to see if there could be a fit. She's also training the next generation of diverse venture capitalists and like helping them build their investment track record. And as a partner, she's leading the strategy for that BBFI that I talked about. They have a 50 million pool of pre-seed capital. So she is in charge of and is working to distribute in the entrepreneurship ecosystem real dollars. So when we talk about real dollars, this is what we mean. And she's one of those people that's really driving that effort. The other thing I want you to know about Stefanie is that she also had started with what's called the Impact America Fund, also a leader in this space of investing in entrepreneurs and innovative companies. And so she's seen it from so many different angles that I'm so glad she's here to tell you all about it. The other person on the call with us today is Wilson. And Wilson holds a special place in my heart. We are involved with what's called the Venture Access Alliance. It's a city program run by New York City's Economic Development Corp, which Wocstar Capital oversees. And it's a 100-plus membership organization of VCs in New York City that are committed to diversity and inclusion and actively investing in the community there in New York City. And Wilson was one of the early members to join and just was so engaged, so thoughtful in helping how we organize the work that we did, and he's just really committed to the community. And so I'm really glad that you guys are going to get to meet him too, and you'll see why I'm smiling, because he's an amazing human being. But more importantly, he has both perspectives as an investor um, and as an entrepreneur. So, as an investor, he's a venture capital partner with Aspire Capital Management, where he's supporting investments in fintech and B2B and SaaS and e commerce. And also, he's an entrepreneur. Not once, not twice. He's seen and worked with several companies. And most recently, he is the co founder and CEO of Nivel Risk. Now, Nivel Risk is very innovative in that they are helping commercial mobility fleets use data and AI to manage the risk of those fleets. And so that's an area, as you think about where growth is happening and where's opportunity, this is one of those areas, and he's leading and building a company in that space. So as you're facing challenges as an entrepreneur, he can relate to those as well. So I'm really glad he's going to be here to give both sides of the equation for you guys. So as we get into this conversation, please, please, please put any questions into the comment section so we make sure that we get to those. And for those of you that are going to be watching this recording later, we'll have ways for you to stay in touch with us as well so that we can be answering your questions and getting you involved with the Wocstar community. But let's get started. I'd love to, listen, and I probably left out tons of things in your guys' resumes and bios. For instance, I think, Wilson, are you a lawyer as well? Like,
I'm a lawyer by background.
yeah, right. Like, I'm sure I'd left out so many good things about both of you. So let's have you fill in some of the blanks in your bio and get us to like where and how you got to be in the VC world, because in many ways it's not a sector or an industry that generationally our communities are present in, right? So curious how both of you came to this space. What was your journey? What was what was your journey?
Uh, um, I guess I'll start.
Sure, yeah.
Sure.
So I, yeah, I'll actually go through sort of where I am now and work back on my resume a little. So Gail, like you mentioned, co-founder and CEO of Nivel Risk. We're a 21st century insurance brokerage, helping fleets with their risk management practices and really also building the agentic marketplace for commercial auto insurance. Before that, like you mentioned, venture partner at Aspira Capital Management, investing in fintech, B2B SaaS, e-commerce, and healthcare companies, but specifically founded by historically excluded or underrepresented founders. And how I got there really just ties into my background. Before that, I founded a logistics company where I got a feedback from the managing partner at Aspira Capital, who I met by just growing up in the community. So before all of this, before founding a company and getting into VC, I grew up in my family's taxi and livery business in New York City, specifically in Washington Heights. And then for even broader background, I just come from a really entrepreneurial family of Dominican immigrants. So on my father's side, it was bodegas. On my mother's side, they were livery drivers, and that's how we got into that world. And that's really all I knew. And those were all the folks that I was around all the time. And so being an entrepreneur is something that I wanted to do, but I didn't really know how, or what it looked like at a professional level.
Yeah.
And at one point in my early 20s, I met this guy called Benny Lorenzo, who is the managing partner of Aspira Capital Management. And he was so different than anyone that I knew in my life at the time, because he went to Harvard and he was Dominican, but was a hedge fund manager. And he ran an investment bank on Wall Street. And he did all these things that I didn't really know um, I would have the opportunity to do at the time, right? So I really went out of my way to stay close to that guy, like over the years, right? So whether it was just helping out my family at the insurance brokerage that they had, which specifically focused on livery drivers, or what people would call Uber and Lyft drivers now, but mostly Dominican immigrants, like that community. Whether I was doing that and helping modernize that business, I would go back to Benny and say, hey, what do you think about this idea? Something like that. As I grew professionally, we'd always sort of just trade ideas on business and all that kind of stuff, and we grew closer. When I ended up founding my company in the last mile logistics space, he gave me a lot of really valuable feedback, and we started growing closer professionally. So when it came time for him to want to launch Aspira Capital Management Fund 2, he asked if I'd like to join, and I thought it was a great opportunity to learn what it would be like. To think about things from an investor's perspective. And that's ultimately how I made my way into venture capital, was just by staying close to somebody who was involved and being ready when the opportunity came.
I love that. And I have such respect for Benny as well. He is so generous with his time, his mentorship, and his champion for people. And so I love hearing how he did that for you and made this opportunity for you. He's the real deal. Stefanie, can you tell us about your origin or your journey into VC? And curious if there is a person that you can point to that might have been a big influence in that journey.
Yeah, my journey is very similar to Wilson's, where it was very family rooted. I grew up in an entrepreneurial home. My father is a serial entrepreneur. He's a small business owner, and so you know, growing up with a father who's very entrepreneurial, I've always had an affinity towards entrepreneurs. And when I launched my career in venture capital, it was really about tying back to those childhood memories of seeing my dad build his businesses. Some he failed at, others he was quite successful. But all in all, it left an impact on me around family legacy, financial stability, and then also being able to just sort of manifest destiny around your wildest dreams, right? And so what I love and what gives me fire around venture capital is meeting individuals on a daily basis who have a vision, have a wild dream that they want to fulfill, and they're looking for partners to support them in that. What I bring to the table is working with founders on how to get there, because it's not easy, but also how to go from scrappy founder to executive with, a large organization, large and growing organization, how to do that in a way that makes sense for your company.
Awesome. Can't wait. We're going to get into all of that for sure. Wilson, I want to come back to something with you because you talked about having a logistics company. You talked about your family being entrepreneurial. What was the biggest shock on the finance side when you started being an investor? What was the biggest shock, surprise, being on that side of the house?
It's something. The biggest shock and surprise, as someone who was looking at venture capital or institutional capital as like this mystifying thing, was
Yeah.
that there isn't as much science to it as folks would like you to believe. That it's actually about who you know a lot of the times, and the right words that you use with them, and being in that room at the right place at the right time and getting that right referral. It's much clickier and much more close-knit, the folks who get access to capital. And I know that that's something that we sort of knew. We kind of had some folks at least had an idea about on the outside. I certainly, as someone who, I have also like a different background. I didn't get an MBA. I didn't go to some of the, just a different sort of background. That was my perception from the outside.
Yeah.
So sitting and actually evaluating companies and going through the analytical process of making an investment decision and understanding, especially at the earlier stages, right? You're talking pre-Series A. Like you're looking at we were a seed stage fund, so we did require some traction. But at the earlier stages, where there just isn't as much data to hold on to, it really comes down to a lot of times, do I really value this person as an individual, as a business leader, as a founder? Do they have the qualities that I believe allows them to, break through barriers, break through walls, and actually build a company and accomplish their vision, right?
Yeah.
And that was eye-opening to me, because again, when you hear investor and you hear all the fancy terms, you think they must have this, 150 point algorithm for making every single decision when it comes to investing in a company, and that is not the case. A lot of it does come down to, having some data points, having traction, having something to talk about, but a lot of it comes down to your vision, your story, and being able to connect with the other person, on, in this case, on the other side of the camera, but often it's on the other side of the table.
I am smiling inside because to take a term from Bravo and the reality housewife franchise, you have just broken through the fourth wall. And I'm so glad you shared that, because it's absolutely true that there's more art, relationship, trust in those early investments, in those early stage companies. And so for all of you that are listening, all of you that are raising capital, that are going to be seeking capital for your businesses, the networking, things like this, right, where you get to know a Wilson and you get to know a Stefanie and have a sense of what they're looking for and what their quirks and pet peeves are, is going to serve you so well. So yes, you're going to be busy building your company. Yes, there's going to be some cold call emails and introductions that meetings that you hope to get, but invest in relationships, invest in the networking, and do keep disciplined around the follow-up. If I'm really honest about the fundraising we did to raise the Wocstar fund, I didn't follow up in some cases, and I probably left millions on the table because I didn't follow up and I didn't really nurture that relationship. So Wilson, thank you for sharing that with us and breaking through the fourth wall, because we all needed to hear that for sure. But I also like that you brought it back, though, in terms of there are things that we need to see in companies when we're making decisions. Like you said, the leadership, the team, an understanding of the market that they're going after, the business model, like what does that business model look like? One that I am always listening and looking for when I'm evaluating companies, and my team does as well, is how well they can defend market share. So you talked about, like, is this the person that can get it over the goal line? Is this the person that can really operationalize that vision that they have into a viable, healthy company? I would take it one step further and say, are they also able and understand what it's going to take to defend market share? Because in many ways, the early pop that you get happens in some ways because it's a novelty, it's new, it's the new shiny thing on the marketplace. But the ability to sustain and get repeat revenue and be able to increase the number of customers and clients or subscribers or purchases, and then be able to do so in a way that people can't take that away from you, right? As soon as you're doing something well, someone's going to come into that market. So that's something we're also listening for as well. I saw you shaking your head, so I think maybe you're agreeing with me on that.
Yeah, no, wholeheartedly. I mean, and a lot of that comes back to the domain expertise of the founder, or just the sheer level of speed by which the founding team is moving, and we can get into all that stuff. But all of that is very, very important.
That's right. That's right. Well, get into it. Tell us a little bit. What are you thinking there?
One of the things that really does stick out. I mean, I think about my particular case. So I'm building something in commercial auto insurance, which is about probably as boring as you can get. And almost every time I talk about what I'm working on with my wife, I can tell that as soon as I say risk management and claims and I say 2 or 3 words and her eyes are glazing over, and I can just tell that I've lost my audience. So which
it doesn't make for great cocktail conversation.
It does not make for great cocktails. So and that's. And in my particular case, that is by choice. And I think this is where sort of a little bit of the VC startup thing comes.
Yeah.
comes into play. I think the fact that something is so boring, and I'm not saying, or something that not a lot of people are going to willingly choose to invest a significant period of time on, like basically build a company this way, stuck on years of work, is in itself somewhat of an initial moat that protects you, and therefore the fact that you're choosing to do that shows that you have a certain level of expertise in that space, so that protects you, and that gives you some runway to develop the momentum. And when you start thinking about how to identify problem areas that need to be solved, and there's a lot of problems that need to be solved in society or in business, and you can identify those pockets, that is a useful skill. And thinking the way an investor would look, that's how investors sort of think about things. It's sort of like, what's the problem, where's the pocket of opportunity, and how do you stay in that pocket long enough where you get enough customers, and you can protect yourself when somebody bigger, better, faster comes along, right?
That's
And
right.
that's what you're speaking to. So in my case, I think about that. I leveraged what I know really, really well. I ran a logistics company, commercial auto insurance, insurance brokerage, all that kind of stuff, and that's why I'm there, and that works for me. At the same time, for founders that are maybe listening to this and saying, "Hey, I don't know anything about selling a new protein shake or new juice or whatever it is that they're building," but they understand, they have a personal connection in some way, you
Yeah.
know showing that you can move really quickly because you're able to learn really fast, you can overcome that. And so just saying, not necessarily having the as much domain expertise doesn't necessarily prevent you from tackling a problem in a market that you're really passionate about learning about.
Yeah. I love that you said that, because I think too often we get into this space of, like you said, like, oh, if I don't know AI, then I can't build a company, or if I don't know about this sector, I can't build it. In many ways, it's about building a team. Like, are you good at building a team? Like, do you see a problem that needs to be solved? And do you have a idea for a solution? And then can you build a team that can activate that solution? And so, in many ways, I don't need the CEO to be great at coding and at social media and at HR and at, accounting, right? Like, build a great team that can do those things, but be the visionary, be the leader, that's needed to build the company. So I think you're right. I think we need to get that word out more to people, that like, don't shy away from entrepreneurship because you don't have that industry expertise. Like, there's other ways in which you may have the talents to start a company or be a part of a company that's being built, right? Like, you can be one of the co-founders, right? You don't have to be a founder or solo founder. So thank you. I love that you hit upon that. But Wilson, I want to switch gears a little bit, and ask you about the meetings, the actual meetings, those pitch meetings, those founder meetings, like when you're across from an investor. When do you know that they're going well? And maybe when did it go badly? Like, what are some things that like can help ensure a good meeting? Maybe some things to avoid. Curious what it's been like when founders have come in to talk to you, seeking funding.
It's a good question. I would, in general, most meetings go well, I think, nowadays, because I think folks, especially if you're raising money, and what I mean by well is that, the person comes to the meeting prepared. They understand their business. They understand their market size. They can, in general, answer the questions. And most people who've taken the leap to start a company, um, are high agency people and really focused people. And in general, even if they're not like the best orator or communicator, can explain what they're working on, and especially at a seed stage where they've been working on it for some time. So you don't I would say most meetings go well in that regard. You don't always make the investment because you have your own criteria, and I think that that's different. You do know when a meeting goes bad, because those really stand out, and they generally in the meetings that not haven't gone great, where you walk away saying we're either not going to make that investment or there's just not a click, like, for sure. A lot of times it really comes down to a different sort of view on what venture capital or company building should be. So some founders, for example, um, even though they know their business and they know certain details, may not necessarily think having all of their financial models, or having all of the next 5 to 10 years and laid out, exactly the way they should. They might say something like, for example, and we've had this in meetings, say, I'm here for the vision. I will figure out the numbers later, and I'm more focused on building my company. And that works for some investors, and that works for a lot of investors. And for other investors, stuff like that does not work. And you can sort of tell when there's just a different approach to understanding how to build a company and analysis and stuff like that. And that's typically what breaks you apart. And what I think the lesson learned there for founders listening to this is, know who you're pitching to. That's the best way to avoid having like a really bad meeting, right? Know what the thesis is, know how they view things, right? It's not even just about the criteria, how they view things and what they think is important. And that's the best way to avoid like a really bad meeting. And in general, everything else should be fine, because most people are pretty professional nowadays.
Yeah, I wholeheartedly agree. 2 thumbs up on that one. And Stefanie is back. We were able to figure it out. Thank you, Stefanie. Thank you for sticking in there and helping us get through the tech issues. So, Stefanie, we were just talking about what makes for a good or a bad meeting, investor meeting. And where Wilson landed was, know who you're meeting with and understand what they're looking for, what their particular interests are, what their quirks are. And I couldn't agree more. And, listen, websites never tell you, what you need to know. But you can go and talk to some other people that got funding from them, right? That's some of the homework you can do in advance. The other thing I would say, and I'm curious, Stefanie, your take on this, or what makes for a good or a bad meeting. The other thing is just even open up the conversation by like asking them a few questions, like, hey, what was it that made you want to take this meeting? There's so many people you could have met with today. I'm glad you're meeting with me and my company, but curious, like, what, brought you to want to have this meeting, right? Or ask them what things they're working on, what's in their pipeline, like, what are they excited about investing, right? Like, use those icebreakers as a way to just inquire about them and find out, what they're interested in, as opposed to what I've seen sometimes. People just sort of get in the room, and I get it, they're nervous, but they get in the room and they just go on autopilot, right? They just are getting through those 20 pages in their presentation, and they don't breathe. And I'm like, oh my God, this person's gonna pass out. They got to take a breath, but they're nervous and wanting to get through the whole thing. So those are some things I think that can help to make for a better meeting as well. To your point about knowing who's on the other side of the table. Stefanie, thoughts, reaction, what's made for a good meeting or a bad meeting that you've had?
Yeah, and we could spend a whole hour on this just in and of
Maybe
itself.
that'll be, maybe that'll be another session. Just
Well,
the
I'll
do's
say,
and don'ts.
yeah, exactly. I'll say, we're humans too. We go through ups and downs as venture capitalists, especially the emerging funds and the younger funds are also on, the other side of the table with, our limited partners, where we have to pitch and raise capital ourselves to be able to support you all. And so, thinking about it from that standpoint, I think can ease some of the anxiety, because we understand, the stress points and the pressure of it all. But just come into the conversation, human to human, really excited and passionate about what you're building. Know how to shape the narrative around that, because honestly, we can get into the numbers and you want to make sure you know your numbers, but at the end of the day, you're selling a story. And so you're pulling at those heartstrings of the person on the other side of the table to figure out where you can connect with them at a meta level, to where they can get excited themselves about what you're building and want to come on board. I would say do, in terms of do's, be authentic, be yourself, because, only you can tell your story. And so that story, is a unique one, right? And you want to also connect the story of who you are to what you're building, right? And why you're the person to build for it, why you're the person to make the sacrifice, whatever those sacrifices are, to believe in this vision because of what you've lived, what you've experienced, what skills you bring to the table. I would say also make sure that you're thinking ahead in terms of what the end looks like. I always tell entrepreneurs, if you're going to fundraise, understand what you're fundraising for. It's not just about building the company, but what's the exit game for you? Become a public company? Is it to be acquired by a bigger company that, you really admire and you think is strategically aligned? Or is it to be, a ongoing, a going concern, operation where you're profitable, and maybe one day you want to pass it on to your children or to a younger generation. And so when you think about where you want to land, ideally as a company, but also as an individual, then you work backwards to say, okay, well, how do I get there? How much capital will I need? And what kind of investors will I need for the capital that I receive? It's going to be, when you're raising money, it's not in venture capital. It's not like just going to get a bank loan. You're really building a partnership. You're really almost like in a marriage. And these things take time to grow and scale, right? It can take you 10 years, it can take you 12 years. And so you want to make sure that the person on the other side of the table is someone that you want to work with over that long term. You can get through the highs and the lows with. You can trust to have your back, and is also, a great resource for you when there are tough questions or tough things that you have to navigate that are just unfamiliar to you and are very new. And so, yes, when it all goes back to like doing that diligence, knowing, who are the investors, but also making sure that you know yourself, you express your authentic self so that you can have the right match across not just capital, but what again, they're bringing to the table, where you're headed, and if those things just match up in the right way that makes sense for your business.
I love how you describe that relationship, like it being a marriage and it's going to take time. And knowing the end, what's the end goal? I often ask in meetings, so how am I going to get my money back? And I say it kind of bluntly like that, right? For a little bit of the shock factor, right? Like, so how do I get my money back? You want us to invest, you want Wocstar to invest $500,000, $1 million. How am I going to get it back? And the looks are kind of like, they never, I can tell many of them are shocked when I ask that, but it's what we're thinking, right? As VCs, we're thinking about our investors, right? Like, I'm putting other people's money into your company. I need to know how I'm going to return that money to them. So I love that you framed it that way. Tell me this. When you look at companies, let's say the meeting went well, you're not sure, how much due diligence are you doing? Like, what's the normal process? Because it's not like someone can come in, have a great meeting with you and be like, oh my God, we had such a great meeting, Stefanie's great. There's not a check that day. What's the process? What's the reality that we can share with people of what it looks like to get that check? What's been the experience for you, Wilson, in terms of like when you first meet a company to then when you probably will be sending that wire?
For us, we had a pretty structured process. It would take a few weeks, depending on how quickly we could get information back from the founder. For us, we take a look at the financials, any agreements that they said during the call that they had in place, that they actually had those agreements in place, whether it was with partners, with customers. Um, a lot of it is just verifying that what they said on the call is there written down somewhere. Also, making sure that the pipeline of customers, if they said they had a pipeline of customers, that they have that written down somewhere, and we can see that pipeline. And one of the things that we liked to do was see the confidence level around closing deals. If it was a B2B SaaS company, for consumer, it's a little different. We did less consumers, so a lot of it would probably center around users and confirming, how sticky those users were. But on the B2B SaaS side, we would then go even further, and if we were really interested in a company, but we were sort of on the fence about it for whatever reason, we would ask to speak to customers and and other either investors who were investing in this round, or previous investors. And in all of that, if since we were a smaller fund and we weren't really evaluating many deals at the same time, could take a few weeks, 3 to 4 weeks, about that, and we would be in a position to deploy if after that we wrote up our memo and felt confident.
That's amazing. That's really helpful for people. I appreciate you saying that. I think we have a couple questions. I want to make sure we save room for those questions. And I want to make sure we get everybody out of here at the time we said. So let me ask our producer or moderator, Colleen, to help throw some of those questions from the audience out for us.
Yeah, let's see. We've got a couple here in the chat. It looks like we'll do this one first. Wilson, this is for you. Can you tell us more about what things or sectors Aspira is investing in?
So Aspira is a generalist fund, so they will look at companies across a variety of different sectors, so long it's not deep tech. Costs a lot of money to really build out the product and stuff like that. So software companies, asset light companies, we have a pretty clear sort of criteria of companies that we're looking for, what they need to have in place, from a traction perspective, and that's all on the website. From a sector perspective, in terms of areas that we've liked, fintech, and that ties into just the fintech, the banking side for Benny, who's the managing partner, the insurtech side for me, having that background. So we saw a lot of fintech deals, cross-border payments, B2B SaaS. Is specifically invested in one legal tech company. We have ed tech, and that's really more of an expression of our overall mission and thesis, which we were looking for underrepresented founders, but more broadly, it was about trying to make money while doing good in areas where we actually were able to add value. So we would go out of our way to try to find ed tech companies and stuff like that. So again, generalist fund, but our strengths were fintech, B2B SaaS, and then we did some ed tech deals.
Perfect. Okay, and one other question from the audience here. What is the best way for founders to meet you and other VCs?
So this has changed over the years, and I actually think it's like Stefanie could certainly add some color to this. I think it's actually really great what's happened in VC and then the startup ecosystem through things like the VAA and just the sheer number of networking events. Like at any point you have, whether you're subscribing to anyone's newsletter who's just putting up all the events going on, at least in New York City, right? We're in New York City. Yeah. So, but I'm sure, and whether you're in San Francisco, Los Angeles, Chicago, Atlanta, if at least you're anywhere near a major metro area, there are people who are building companies and investing them in some way, and they are gathering somewhere, and that should be on a newsletter somewhere. So get a hold of them and go and show up and talk. And again, going back to the earlier point about this being somewhat more of an art than I expected, and it's an art and a science. Being visible and having your face in front of people intuitively builds trust, even if you're not even pitching your company, right? It's just like, oh, I've seen this person before. It's subconscious. It's like, oh, this person exists, and they 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 dress decent enough to be allowed into this place, so they must be somewhat respectable. Like there's something that happens in our brain that says this person can potentially be trustworthy, and so that makes it easier for you to have that next conversation. Again, even if you just go there to meet folks. So these newsletters exist. Get a hold of them, and get yourself in front of folks.
Yeah,
Absolutely.
I love that because you're right. It's just the familiarity that starts to build trust. And so the more that you're around people and they see you at these events and know that you're of that ecosystem, is just going to help break the ice that much easier when you do want to get to a place where maybe you're asking them for capital, for sure. I want to ask this of Stefanie too, but I'm not sure if she's back on with us. But I'd be curious
We
to know.
might
Go
start
ahead.
I
again. Oh,
apologize.
wait.
I had a little bit of technical difficulties for some reason, but I'm
Yeah.
here. I really want to be a part of this discussion.
Yeah,
Ask
no,
questions.
no problem. We might even come back to you for a separate session. But Stefanie, how do people get to meet someone like you? How do they get to meet some of your peers? I know you're in DC, but what's been the best way that people can do this networking that we're talking about? Wilson had great ideas about getting to these conferences and industry events. Any other thoughts?
Those are definitely helpful. We also will often, host different events ourselves. Zeal Capital, we're based in Washington, D.C. We often do get-togethers, gatherings, happy hours, and we invite founders to come out and talk to us. There's ways to do it online where, you know, LinkedIn could be a intro. It's not always the highest response, but it's a way to connect online, and you'll find a lot of VCs online. And even if you're not connecting directly with them or with myself, there's a lot of content where you can, going back to understanding and knowing who you're talking to. Um, Often VCs will be very clear about what they're looking for, the types of companies they're looking for. And so that could be helpful on your journey as well as to whether or not you want to make that connection. Um, Look into your network too. I think a lot of times we underestimate who's in our networks. And so it's a matter of just activating it. So if you're, back on LinkedIn again, and you're wanting to do a cold outreach, instead of doing that, maybe you found that someone who's in your LinkedIn network knows that VC and can make a warm intro. And oftentimes the warmer intros are more responsive for entrepreneurs. So, just being thoughtful and creative about how to get access to people, I think, is important. And it also shows your own resourcefulness and ability to just navigate, because that's one of the first hurdles, right, of being a of early company, is getting access to early capital. And if you can figure out how to get in touch and get in front of the right folks, that says something about your ability to get to what you need to get to, whether it's bringing in more customers, bringing in more employees to work, as part of the team. All those things matter, but a lot of times it's really about the network. This, venture capital, I say, is about 99% people, and the rest, process and those other, factors, beyond the relationships. But the relationships are really critical. And so today there's just so much going on, so many programs. So just, start with your local community where you are, your city, and, finding out who are the sort of venture capitalists that are rooted there. Also think about what accelerator programs are there, and then get out there and start meeting people. And once you do that, you'll find that your network will just expand organically. And as you continue to talk about your work too, you'll find that people will come to you. So, again, using online exposure to even discuss that you're building something. I don't know if you all heard of building in public, but that's a way of sort of personal promotion and branding for you and your company.
Yeah, all really good advice. And listen, this Wocstar Academy, right? The Wocstar Entrepreneurial Academy is a community, right? So like you've got Colleen, you've got myself, you now know Wilson and Stefanie, right? Like this is a community and we are all committed to the success of each other. So tapping into some of the other people that are on the team, as well as your peers, right? Those other entrepreneurs, they know other investors. They can tell you like, these guys are just going to spin you around. They're never going to write a check, or, hey, these guys are great and they go quickly. They ask thoughtful questions, right? Like, so compare notes, right? Be willing to make intros for one another. Because now you're not seen as just out with your own, hands trying to, raise capital, but maybe now you're a resource. Now maybe you're introducing to Stefanie to someone, someone that she wouldn't have known. And so you're now being helpful to her as opposed to just, asking her for a check. Hey, Stefanie, we have only like a few minutes left. Really quickly, can you tell us what things, sectors, I should say, that Zeal Capital is investing in? So for our listeners, they can have a sense of whether or not you guys might be a fit for them to approach. What sectors or spaces and places are you guys investing?
Yeah, so we are known as being category specific in 3 areas. Fintech, you think about financial inclusion, access to credit, things of that nature, even tools and support for small businesses. So fintech is one. Another is what we call future of learning and work. We're thinking about how to upskill low wage workers, how to navigate with new technology around recruiting and hiring. And then the third bucket is healthcare, looking at health equity, affordable healthcare, access to healthcare, women's health, and mental health. So fintech, future of work, and healthcare are the categories where we spike. And then at the pre-seed level, the very early level, we still focus very much on those categories, but we're a little bit more open as a generalist, so we can flex beyond just those categories to support early founders.
Awesome. Wilson, final thoughts. Any last minute nuggets you want to share with this group of entrepreneurs?
We talked about being knowledgeable, be genuine, don't be something that you're not just because you think it's like what VCs want to hear. Um,
I love
just,
it.
yeah,
I
I would
love
just
it.
say that that's the most
Yeah,
important.
no. I love it. So thank you both for being here, taking time, sharing, breaking the fourth wall, Wilson. Stefanie coming back in every time that darn connection dropped. I appreciate you. See that resilience, that persistence? I love it. That's what we need in entrepreneurs. Colleen, any updates? When's our next session that you can share with the team before we say our goodbyes?
So this is not it. We'll have another session next Thursday at the same time, 1 p.m. Eastern, 10 a.m. Pacific. Next week, we're going to be talking about how to master AI tools for entrepreneurs. So this is a really, really great one. It's going to be more of an instructional one. So come prepared to really learn how to maximize the resources that are free and at your fingertips so you can do less and focus on your business. And that will be with our very own Vonti McRae. So next Thursday, I'm going to put the link here in the chat. One other thing I did want to share with you guys is we are going to send a follow-up email, which will have all of these links included in that email. You'll have ways to get in touch with Wilson, with Stefanie to find out more about their companies. If you are a company that can possibly be looked at, they will also share those. And then also check out Wocstar Academy for our upcoming series, in addition to the one we're having next week. And if you are not an alumni, please check us out to join us for our next cohort. But we just want to thank you all for coming. Wilson and Stefanie, thank you again. I'll reinforce what Gayla said. We really appreciate you both taking the time and providing these amazing insights into the VC world. Like Wilson shared, we don't know what we don't know. And so it's been really wonderful to hear from you all.